So we are waiting a little bit, and till the others arrive. We are only 4 so far. Yeah, I think this week is our last week. I think tomorrow is our last lecture. Is this correct? Do you have the same information?
Yes.
Yes. Okay. So tomorrow is our last lecture, and I've been said by the examination office that it will probably be by the responsible person that it will probably be an oral exam. So your exam will probably be an oral exam, because I think they are probably doing an oral exam because of the COVID situation. So it's probably not possible to do a written exam, but this is a thing of the examination office, and I'm not 100% sure, but probably it will be an oral exam. And that will, if it is an oral exam, that means that we will do the exam probably with GoToMeeting, so with this online lecture room.
Okay. When is the exam?
They will, from the examination office, they will set a date, but it will not be next week, because I mean but I don't know the exam the exact date. They will inform you. So I'm not the responsible person for the exam. I only got this information that because of COVID, it will probably have to be an oral exam, and I hope I or the examination office can inform you as possible, as soon as possible. So this is the only information I have, yeah. I mean, it shouldn't be a big thing, but I think it is very likely that it will be some form of oral exam. Okay.
Okay.
Now more and more students are coming in this room. I'm repeating this for the students who have just arrived. The exam will probably be an oral exam, but this is a thing of the examination office. The examination office has to decide or approve that, and but because of COVID, it will probably be some form of oral exam, and that would mean that it will be over such an online classroom, GoToMeeting or Zoom or something like that. The exact the date, I've not been informed about the exact date of the exam, but the university. The university will inform you, or the examination office. I don't know, but it will probably it will be in the next couple of weeks, of course.
What the question type will in the exam choice or the analyze?
I mean, I'm not 100% sure about the question type because I don't know for sure which type of exam the examination office chooses, but of course it will be questions that will be related to this online course you have we did together. I think most of it will be open questions, so it will not be multiple choice.
Okay.
Yeah. So it's probably more open questions than multiple choice. Yeah. Okay. Yesterday we talked about Apple, the company, yeah, and you analyzed the company. We analyzed the company together, and then we made some conclusions about the company. Can you repeat maybe shortly in your own words what the company is about and whether it is a good business and what we found out yesterday? Is it a good business?
Yes, it's a good business.
Yeah, it is a good business. We found out that it is very profitable. Yeah, we calculated the net profit margin. I remember that it was about it was more than 20%. Was it 21%? I think it was about 21%. So we calculated the profit margins. I think the revenues and sales revenues and the net income was more or less flat. I think it in the last 3 years. Did we looked at the last 3 years? So I think it went up and then it went down, but it was it was at a very high level. What did we say about a leverage? Do you remember that? Does the company use a lot of liabilities? Yeah. Yeah, very good. We said Apple has relatively high liabilities in comparison to equity. This is correct. But because Apple also has a lot of cash and marketable securities, it is able to pay back its liability every time. So if you put that into perspective, it's a very stable business because it has so much cash and marketable securities, and the marketable securities are pretty close to cash, so it is able to pay down its liability very, very fast. So what about the cash flow from investing? What about the cash flow from operating activities? Do you remember that? Yeah. Exactly. Yeah. So this is mostly from the operation, mostly from selling iPhones and iPads. iPhone is the most important product. I give you a view on the numbers. So do you see the Excel sheet now? Yes. So in the first row, you see the sales. Yeah. So the sales revenue, they went up. 2016, 2017, 2018. Then it went down a little bit. Here in the next row, you see the growth rate of sales. This is here. This is the yearly growth rate from one year to the other. Do you see that? Do you see when I'm clicking? Do you see where I am with the mouse? Yeah. Okay. So here, this is the growth rate from one year to the other. So here you see that actually. So in most years, the sales of Apple grow. Yeah, there are some down years. There are two down years essentially here. In 2016, it went down by 7.7%. This is from 233 billion to 215 billion, and here in 2019 it also went down a little bit by 1.9%. But in the other years, it went up. Yeah, and here you see the compound annual growth rate, and the compound annual growth rate is kind of like, it's the growth rate over the whole period. Yeah, it's the growth rate over the whole period, and this is about 7.4%. So 7.4% is the growth rate over the whole period for Apple. Do you think 7.4% is good growth rate? Or is it? It's not bad. Yeah, it's not extremely good, but you have to take into a perspective that it's such a large company. Yeah, and for large companies, it's more difficult to grow at fast rates. So for such a large company, Apple is a very large company, is one of the biggest companies in the world. Such a growth rate is good. Yeah, and here in the next row, I typed in the net income. Yeah, I typed in the net income. Can you repeat what net income actually means? What is the net income of a company? What does net income mean? Where does it, in which financial statements do we see the net income? Is it the balance sheet, or is it the income statement? Exactly, yeah, very good. It's the income statement, and it shows what the business has earned over one period. Yeah, what the business has earned. It's the bottom line of the income statement. So that means you have to deduct all the expenses from the revenues. Yeah, does that make sense? Yeah. Yeah. Okay. So this is what Apple has earned in all these years. Yeah, and you see that it also went up in most of the years. Yeah, here you see the growth rate of the net income. Yeah, so 2015, it's 35%. Then 2016, it is minus 15%. It was down in 2016, then it was up again. 2017, up in 2018, and a little bit down in 2019. Yeah, the growth rate over all these years for the net income is 7.1%. Yeah. If you compare the net income growth rate to the sales growth rate, what can you see? What are the differences? Do you see that net income? It is more volatile. It moves more up and down. Yeah. For example, here in 2016, it goes down faster. Yeah, by 15%. 2015, it has been up faster, 35%. It's more than 28%. When it goes up, faster, and when it goes down in 2019, it goes down faster. So it's more volatile. It fluctuates more than sales, the sales growth, and that is very typical. Yeah, it's very typical, because there are fixed costs. Yeah, that means that net income moves around more and fluctuates more than sales. Yeah. So then here we see the net profit margin. Yeah. I calculated the net profit margin, and you also calculated the net profit margin. What do you think about when you look at the numbers, when you look at the net profit margin for all these years? What do you think? And what? Yeah, very stable. Yeah, very good. Yeah, almost the same. So it doesn't move very much. The net profit margin. It's always about 20%, a little bit higher than 20%, and it's very high. Yeah, this means that out of let's say out of $100, out of $100, $20 is profit. Yeah, this is good. Yeah, so for an average company, maybe $5 or $6 out of $100 is profit, 5 or 6%. Yeah, but here we have What does operating cash flow mean? What do you mean, Ilya? Can you repeat it, please? Okay. Okay. What about the others? Can you hear me? Sue and Jen? Can you hear me? Probably. It's better. Okay. All right. Okay, good. So the operating cash flow is the cash flow from operations. In the case of Apple, it means the cash flow that comes in from buying from selling the iPhones. Yeah. In the case of BMW, it means the cash flow from selling the cars. Yeah. In the next row, what I calculated is cash realization ratio. It is the operating cash flow divided by net income, and it shows that actually that the operating cash flow is higher than the net income, which is kind of like normal, yeah, which is a good sign. Yeah, if the net income is higher than the operating cash flow, then it might mean that the net income is overstated. Yeah, that is overstated when there is no cash coming in. And the next row is capital expenditures. Can you tell me what capital expenditures mean? What is capital expenditures? Exactly. Yeah. Yeah. When you buy the cash outflow for buying assets, and if you compare the capital expenditures to the operating cash flow, is a capital expenditure, is it high? Does Apple has to invest a lot into assets, or is low? Yeah, it's low, and that means the free cash flow. You see here that the free cash flow, which is operating cash flow minus capex minus capital expenditures, the free cash flow is high, and that means that Apple has a lot of cash left even after investing into property, plant, and equipment. This is good. Yeah, this is good because then Apple has a lot of cash left for doing buybacks. Yeah, for doing buybacks and for paying dividends. What is a? Do you remember what is a dividend and what is a buyback? Very good. Yeah, very good answer. So dividend is they pay money to the shareholders. Yeah, they pay money to the shareholders. And buybacks, the company buys back, repurchases the shares, and then the shares, there's a lower amount of shares outstanding, and that means the piece of the cake, the piece of the company for every single shareholder increases, because now the company is not owned, the shares the company has bought back are not owned by the shareholders anymore, but rather by the company. So you decrease the share count essentially. So there's a lot of money left for buybacks and for dividends. And do you remember, does the company engage in buybacks? Does the company do buybacks? And does the company pay dividends? Yeah. Yeah, very good. So they spend much more money on buybacks than on dividends. Yeah. So actually, if you look at the where do we have it? Let me see. Here. Can you tell us, Liang, where do we find the buybacks and the dividends here on this? Yeah. Yeah, so this is buybacks. Yeah, repurchases and buybacks is the same. So, and you see, you see that buybacks is much more in every of the years, than dividends. Yeah. So you also see that Apple is issuing some debt, but they are also paying back debt. So paying down debt. So that kind of like offsets each other. Yeah, you see that. So in this year here, in 2000, what is it? 17, they issue more debt and they pay back. But in the other years, it's kind of like it offsets each other. Yeah. And here, what I did here, I also I told in this I put in the earnings per share here, and as you can see, the growth rate of earnings per share is higher than the growth rate of net income. Yeah, the growth rate of earnings per share is higher than net income in every of those years. Can you tell me why that is the case? Why is earnings per share growing faster than the net income? Exactly, yeah, exactly. Because of buybacks, the number of shares is going down, and that's why the earnings per share is growing faster than the net income. Yeah, why? Because earnings per share is net income divided by the number of outstanding shares. Yeah. Okay. Do you have questions relating to Apple? Yeah. Okay. Yeah, very good question. Let me see where we have it. You mean this, Elian? Return on assets is net profit plus interest expense divided by total assets. Yeah, why is it plus and not minus? Because return on assets shows us what all the assets earn. Yeah, and what is all the assets? Assets equals equity plus liabilities. Yeah, this is the accounting equation. Do you remember that? So here, total assets, we're talking about assets, and we're talking about equity plus liabilities. Yeah. So what is the profit of equity? Equity is share owners' equity, and the profit of the share owners is the net income or net profit. Yeah. But here we are also talking about the liabilities. And what are the fruits of liabilities? What do the debt holders get? What do the bond holders, for example, get for giving the company debt, for lending the money, the company money? It's the interest expense. So this is what they earn. Does that make sense now? And that's why you wanna add it up. Yeah. I think it is a good question, because normally if you want to come up to net income, you first deduct your interest expense. You take minus. That's right, yeah. But in this case, it's the earnings, the profit of both the equity holders, yeah, and the debt holders, the liabilities. And what the equity holders earn is the net income, and what the debt holders, what they get for lending the company money, is the interest expense. That's the reasoning behind this ratio. Yeah, that's clear. Okay, here in the case of Apple, we didn't calculate return on assets, but what we or what I rather calculated is a return on equity. And if you look at the return on equity, yeah, can you explain what you see? Is it high or is it low? Yeah. So 50%, 60%, even 30% is a very high return for the share owners. Yeah, for what the share owners earn on their equity. Yeah, it's not what a stock earns. It's not the share price appreciation, but it is the net income in relation to what the share owners have paid into the company, which is the equity. Yeah. And then we looked at the share price, and we calculated a price earnings ratio. Do you remember that? What was the share price, or what was the price earnings ratio? Yeah, it was about that. And do you also remember the price earnings ratio? Yeah, very good. And can you calculate that? I mean, here is the earnings per share is here for the last year, 11.89, and you said the price was, what was it, 370, I think, 370. So if you take 370 and you divide that by 11.89, what do we get? That's all. Yeah, so that's our price earnings ratio, PE ratio is 31. And is this high or is it low? Yeah, it's high, and that means, what does that mean? Does that mean that the stock is expensive or that is cheap? Yeah. So the company is a very good company. We've seen that because it's profitable and so on, and generates a lot of cash. But the share owners obviously know that, and they have driven the price up, and that's why the share price is relatively expensive. Yeah. Okay. Are there any questions relating to Apple? So far so good. Okay, then I would say we have a short break now. I think 5 minutes is enough. So we make a 5-minute break, and then afterwards we go on and we look at Starbucks. Yeah, Starbucks. You also know Starbucks, the company? No, coffee. Yeah, so coffee. So we know we look at Starbucks, and we look at the financials of Starbucks, and then we also analyze the company. So see you in 5 minutes.